Okay guys, what's up and welcome back to another video. This is Kinsko Education and today we're going to be doing some little business work. The reason I'm telling you about GST today is because I actually didn't understand this for a very long time, and if you guys are in a similar position, hopefully this video helps. So let's get into it. What is GST? GST is Goods and Services Tax. Goods and Services. So GST is Goods and Services Tax, and it applies to most products that you buy. So why I'm saying most is you don't pay GST on your house rents and tax duty products such as the products that you buy in airports and everything. But these are goods and services tax that you pay in the country for all the products that you buy. So GST, what's the rate? In Australia, GST is at a flat 10% on all products. So let's suppose you buy, I don't know, a shoe for $100, you pay GST of 10%. So there are two ways the shopkeeper can go about this. He can, advertise the price as 100 AUD of the shoe and then include a 10% GST in your bill, so you end up paying $110. Or the actual value of the shoe could be $90 and it could be, I don't know, 92 or something, and a GST of 10%, 91, and a GST of 10% to 9, and you might end up paying $100. That calculation's wrong, but you get the idea. Now, GST, okay. This is all plain and simple, right? So all businesses, GST, the end consumer pays the GST, the businesses collect the GST, so business, customer, ATO. I forgot to explain what ATO is. ATO is the Australian Taxation Office. These guys are the ones who collect all the tax money, give it to the central governments, and distribute it for, I don't know, the money that the government needs to do. So the customer, you are the one that's paying GST on the products. So this is how the chain goes, right? This way. The businesses collect the 10% tax, and they hold on to it for 90 days, because every 90 days, it's like this financial quarter, right? Every 90 days, each business is supposed to give all their GST earned to the ATO, right? That's how it works. Now, sure, okay, all this is plain and simple. Customer, you give them the business GST, tax on the product, blah, blah. Now, where it starts to get confusing is if we look at the business level. Interactions between different businesses. So let's suppose that I am a shopkeeper, right? I am a guy in the woods hunting, I don't know, cutting down trees and stuff, and I collect some wood. Now I can go and sell this wood to a guy who makes woods. So let's call him guy making woods. And let's call this guy Hunter. Hunter to guy that's making woods to, let's say the guy who makes the wood, right? Sells it to a furniture shop. Okay. So I'll explain. So this guy collects some wood. He gives it to this guy to make this wood into a beautiful door. And then this guy sells it to the final customer. Now, we know that this guy needs to buy from this guy and this guy needs to buy from this guy. So do they pay GST because they're in between businesses? And yes, they do. These guys pay GST because these guys pay GST in each other. But this is where it's confusing. I said before, right? It's only the consumers who pay GST, not the businesses. Yeah, it gets confusing because this guy's paying, let's suppose this hunter sells the piece of wood for $100. He sells it for $100 plus GST, which is 10%. So this guy bought it for $110, right, including GST. So now this guy paid this guy GST of $10. So this guy has GST of $10 that he needs to give to the ATO. Now this guy makes new wood and sells it to the furniture shop for let's suppose $200, right? Plus GST. So $200 plus GST. Now can start. He sells it for $200 plus GST. GST is how much? $20 plus 20. So yeah, the furniture shop guy gives this guy a total of $220. And now the furniture shop guy sells it to the consumer for, let's say, $300. 300 plus GST, GST is $30. Right? So we can see that this guy's paying a GST of 20, this guy's paying a GST of 10, and this guy's paying a GST of 30. Why? I'll explain. This is where you need to understand a concept called input tax credits. Input tax credits. Input tax credits. So what input tax credits mean are, these are credits given to business owners to deduct when they're purchasing items or stocks needed to run their businesses. So these basically like allowances. So basically money that the government kind of gives you so that you don't pay GST, and then only the final consumer pays GST. So continuing along the same flow, you know how this guy pays him $110, right? This guy gets, the hunter gets 100 and $10 goes to the ATO. And now this guy sells it for $200, $220. This guy gets 20. This guy gets 200 and sells it and gives the ATO $20 GST. But this, what happens to this guy's $10? He gave $10 as GST to this guy, right? Is he just wasting money there, his own money? No. This is where the tax credits, the input tax credits come in. Because this is where the input tax credits come in, right? Let me rephrase it. Now, this guy bought it from, sold it to him for $220, right? $20 tax that he needs to give there. And he paid $10 tax already. He paid $10 tax already to this guy. And now he has to return $20 to the ATO from that guy, right? Except no. They deduct this $10 from this 20. This 20 is supposed to give there, right? Minus 10, because this is where the input tax credits come in, because he's paid $10 of his own money. So they subtract 10, and he only pays the ATO $10 tax credit. So it's not like so basically that's what I said, right? The government's giving him money. He's just deducting it from the tax he taxed them. So that's input tax credits. So this guy was supposed to give $20 to the ATO, but because he already paid $10 here, he subtracts the $10 from here, and he only pays $10 to the ATO. This way he didn't pay any tax for this product. Same way here. You're selling the product to the customer for $330, right? For $330. So $300 is the money that this furniture shop gets, and $30 is the tax that he collects from the consumer. So the consumer is paying $30 tax. He collects $30 from the consumer and gives it to the ATO. But except he doesn't give $30 to the ATO. Why? Because he paid $20 tax on this item. And as I said, businesses aren't supposed to pay tax like GST. So this $20, right? This $20 that he paid there, we use the input tax credits and we subtract 20 from the $30 that he gets from there. So this way he pays $10 tax. So this way each of the businesses aren't really paying tax, are there? They are eliminating all taxes, and the end guy, the end product, the consumer, is the only one who pays taxes. So that's how input tax credits work, GST works, and yeah, that's about the end of the video. Thank you for watching. Hopefully you understood. I understood this, so good luck.